morning, everybody. Let's go ahead and bring to order the Police and Fire Retirement Board meeting for March 18th, 2026. We'll start off with a roll call. Trustee Mann.
Here.
Trustee Flicker.
Here.
Trustee Kwan.
Here.
Trustee Santos.
Yes.
Trustee Votto.
Here.
Trustee Woosling. Here. Myself, Trustee Gardner is present. Trustee Lee is going to be absent today, and Trustee Galapati is running just a few minutes late, and she will be here. Before we start off our meeting, we do have a ceremonial item, and Trustee Galapati is present. Just walking in.
Yes.
Thank you. So we do have a ceremonial item for Prabhu Blani. We got a nice plaque here, and there's a lot of information here in the packet. I'm going to highlight some of the features that were in this. Then once we do this, we'll need to do a vote, and then we'll have comments afterwards. All right. So for those, Prabhu came on board March 11th, 2018. Some of the highlights, back then for the Police and Fire Retirement Board, we were in the bottom 1% of our peers. Through his 8 years of being here, we are now the top 31 nationally compared to our peers. Our funding ratios improved from 76% up to 88%. That is also from a $3.5 billion fund up to now, as of end of Q4 2025, it was $5.9 billion. He modernized the investment governance, established foundational policies and procedures, implemented systematic approaches to risk and returns that led to Plan's remarkable turnaround. He built and retained a professional investment team, trained the next generation investment leaders, reduced consolidated management fees while managing increasing complex portfolios. The service has strengthened retirement security for our hardworking city employees and uniformed personnel and enhanced the fiscal health of the city of San Jose. All while doing this, he received multiple CIO awards. The board hereby express its profound gratitude to Prabhu Blani for his exceptional dedication, visionary leadership, and astounding contributions to the San Jose Police and Fire Retirement Plan, and extends to him his best wishes for continued success and fulfillment in all future endeavors. So this is a resolution for 484, and this is to honor, Prabhu Blani. Thank you, Prabhu. So to make this official, we do need to have a motion and a vote.
Second.
We've got a motion by Santos, second by Votto. Before we take the vote, I'll let everybody have an opportunity if they'd like to say a few things. I'll go ahead and start off. I wrote this down because I had a lot to say, but I just want to thank Prabhu for his leadership and service over the past 8 years. When he stepped into this role, both plans were facing significant challenges. Through disciplined investment strategy, strong governance, and building a talented investment team, he helped turn things around in a meaningful way. On a personal note, over the years, Prabhu and I had several phone conversations and coffee meetups, and those conversations always came back to two things: how to continue to improve the fund and advocating for his team. It was clear how much he cared about building and supporting what will be known as a world-class investment team. The improvements in funding status and national rank didn't happen by accident. Through the result of thoughtful leadership and long-term focus on doing what's best for our members. What Prabhu accomplished ultimately strengthened this retirement system for the firefighters and police officers who depend on the system. By improving performance, strengthening governance, reducing fees, he helped ensure that more of the plan's assets are working for the members and retirees. I want to thank you, Prabhu, for your dedication to the retirees and employees who depend on the system. We appreciate everything you've done, and we wish you the very best for the next chapter. Ashwar?
I'm just coming off a cold, so my voice was sound different, but it's probably fair to say I've known Prabhu the longest of anybody here. And one of the things which I've noticed, maybe true of others, is that as you grow older and, you look back at people you knew in high school or college, that image is still there for a lot of people. And that image is there for Prabhu. Unfortunately, I don't have any funny stories to tell. Even if I did, maybe probably wouldn't want to say. But I think we got in touch again. I'm thinking maybe 20 years ago in San Francisco, I recall. And he had a very smart idea. We had young kids then, and he told me that he took his kids to ski up in Dodge Ridge, which are not very far from here, less crowded than Tahoe, a bit cheaper, I think. And I took him up on that. So my kids also went to Dodge Ridge for many years. So thank you for that. And then I think in 2018, he connected me with Roberto about getting on the board. So again, that's credit to Prabhu. But mostly I would say echo what Andrew said. Thank you for your service, for a job well done, for an excellent team, which will continue. And that's part of your legacy too. And finally, and this is probably only the two of us will understand, both PSBB and Mrs. YGP would be proud of you.
Yeah, I understood that too.
Oh,
Okay.
man.
Yeah.
Probably may not know this, but my first interaction with him was before I even arrived here with San Jose, and I listened to him on a podcast. It was called "Don't Get Fired." It was an institutional investment podcast, but it came up when I was doing research for the job for San Jose. It came up, and so I listened to that before coming here. But when I first arrived, Prabhu took me out for beers so that we could get to know each other, and and that gesture of welcome meant more to me than he probably realized at the time. But over the past months, I've learned much from him about investments, but maybe more importantly about governance and about conviction to advocate for what you believe is best for the service member, what best serves the members, even when it's difficult. So, Prabhu, I'm grateful for your partnership and our friendship, and I hope you will answer the phone when I call you in the future for some advice.
Well, I'll say, when you first came off the board and took this job, I didn't really know what to expect. But as a plan member, we look at things like numbers. And when the number looks good, we like it. I did not know a lot of, I'll say your style or strategy. But what I did like, and I am a huge fan of, is to John's point, the governance part, which is succession planning. You did it with your team. You worked with the people here on this board to make sure we understand where you're coming from. You were the calm in the storm when we had them. And I really did not see how recognized you were until I started seeing you talk at conferences and having people stand up and talking about some of the brilliant things you did, some of the worst times in the investment world. So I thank you, my members thank you, and I know all the retirees thank you for the outstanding job you did here.
Well, Prabhu, I used to watch Seinfeld all the time. I thought his name was Babu. So I finally woke up and pronounced it right, which I have a problem with. But anyway, being the longest serving board member, I met them all. And I really appreciate our relationship. Became friends. Every time he would call me or say anything, I always had confidence. And I really appreciate that, and much respect I have for him. And hate to see you leave, but I hope somehow we can stay in touch. And thank you for your dedication, what you've done for all the firefighters and police officers and the residents of San Jose. Thank you.
So I think I've known Babu for quite a while, a number of years, even before joining the board here. I'm not gonna add too much more beyond what you guys said about Prabhu's leadership, vision, focusing on the long term, at least keeping us focusing on the long term. And definitely thank you for, mentoring and grooming a solid investment team. I think all these characteristics, I think I saw them when we were much younger, really young, when we were kind of going up through the ranks of BNY Mellon. So you stay true to form, and I wish you the best of luck going forward.
I haven't known Prabhu as long as Ishwar or David have, besides the service members, but I got to know him once I joined the board, and always appreciated his investment perspectives, and the notes that he sends when markets are volatile is even after his announced retirement 2 weeks ago, his note was really spot on. Really honored to have. What is my voice? I've been losing it recently, but I'm sure it was quite a transition from being on the investment management industry to public service. And obviously you've done it, as Franco said, the numbers speak for themselves. You've done a tremendous job over your tenure and left something that the team can carry forward. So appreciate your service and very happy to have gotten to know you over the last 5 years.
Prabhu, I've probably known you shortest, maybe except for Dave, by 1 month on this board, but it has truly been a pleasure. Coming into a board, as Andrew described earlier, the change of the investment program from when you started to today to when I started on the board was very dramatic. And as a trustee, coming into the program that you put together gave me a lot of confidence. So I want to thank you for that. And I want to thank you for, as Sanita said, your very calming notes during turbulent times resonated with me, and I very much appreciated it. And I hope that you continue to share your advice as you go forward, and that we continue to see you and hear from you.
Well, to make this official, we do need to vote on this. So
Motion to approve.
we have the motion. We have a second.
Oh.
Already. All in favor?
Aye.
Any opposed? Well, I wanted to give Prabhu an opportunity to say if you like. Then also we also need to hand you your plaque.
Well, thank you for all the support. I'm not a fan of big, long meetings, so I'm gonna keep my comments short. And I do want to thank a bunch of people, which I will do tomorrow, so as not to be repetitive. At the federated meeting. But, it's been an honor, really, managing the pension for uniform personnel. Nothing can be bigger than that. I think that says it all. The numbers speak for themselves, as some of you have said, and that's thanks to the support of the boards. And the greatest accomplishment, of course, is the team here, and they will carry on. And the support I got from John, and prior to John, from Roberto. Right? So I hope to stay in touch with all of you for various reasons. Dick, I'll bring my Corvette during the fall in for your car rally. And Franco would love to share a bourbon again with you. And each of you, really. And Ashwar will continue to trade notes on kids. And Sunita too. I'll see you at music concerts, I'm sure. And Dave will continue to spar on investment stuff, which is always a lot of fun, right? Yes. But really, it's been an honor. And yeah, I'll keep it short. Thanks, guys. Thanks for all your support.
gonna say, you wanna snap that off for the newsletter?
We were gonna do a staged one in front of the new investment lobby sign afterwards, so.
All right, orders of the day, there are none. This time we'll take any public comment, if there is any public comment.
No.
Looks like there is. So we're gonna go ahead and go to, closed session. All right, let's go ahead and bring this back to open session. There is no reportable items from closed session. So we'll go ahead and move to the consent calendar. Is there anything that needs to be pulled from the consent calendar?
Too cool.
All right, we got a motion from Santos,
Second.
second by Eshwar. Any comments? All in favor?
Aye.
Any opposed? All right. That brings us to investments, to A, update by CIO Prabu Kalon.
Thank you, Mr. Chairman. Before I get into numbers, I also want to thank Councilmember Casey. I think he was not there when we were doing the commendation. I've only known him for a short time, but we hit it off well. I'd like to think of him as a friend and hopefully we'll stay in touch. With that, as always, performance estimates from Makita. And despite all the turmoil in the market, of course, we've lost some ground from the last board meeting. But despite it all, fiscal year to date, the plan is still up 6.6%. And the healthcare trust is up 10.15%. I'm sure there'll be a lot more volatility in the weeks ahead. But we have a portfolio that can hopefully weather through all those storms. And we will take advantage if there is a big drop in the market. And of course, if it becomes anything like 2020, I'm sure your next CIO will call an emergency board meeting to discuss that. With that, so this month we will be discussing last quarter's performance. And as you all know, private markets are 1 quarter lagged, so it'll be third quarter of 2025. And Casey Boyer is on leave today, so in place of Casey, we have Tyler Zenga. And so unless there are any questions for me, I'd like to invite Tyler.
Terrific. Thank you very much. Can you all hear me?
Yes.
Okay. I'm going to try to share my screen so you can follow along on the page, a couple pages I'm going to reference. Okay, terrific. So as noted, I'm Tyler Zenigi. I work on the investment team alongside Casey, work closely with her, and so very pleased to present to you today. I'll start on page 2, which hopefully you all can see at this point. Hopefully this is a familiar page to you. We have summary performance of the private markets portfolio, starting with the legacy portfolio on the far left, followed by the 2 mandates with Neuberger on the next 2 columns. Series 1, which is the second column from the left, is fully committed and has transitioned into a more mature harvest-oriented stage, although some of the primary fund investments in that portfolio are still actively investing capital today. And then the next column, Series 2, is where we're actively making commitments today. That series launched in July 2023, and so we're now in the 3rd year of that program. Very similar strategy in Series 2 as we had in Series 1. We work very closely with the San Jose investment team on pacing, allocations, new investments, et cetera. And Series 2 and the overall portfolio within that program is still very early today, still developing still committing, and so we're very focused on diversification and annual pacing alongside the team. As you may know, the last few years in the private markets have been a relatively challenging distribution environment broadly, although that has started to change a bit, and happy to report that during Q3, the portfolio made 8 million of distributions back to the plan. All of those, given the age of the programs, were coming out of Series 1 rather than Series 2. And most of those underlying distributions were funded from selling portfolio companies within that program, primarily from the primary fund investment portfolio. One notable exit, which led to nearly a $7 million distribution, was from a turnaround middle market manager that sold a healthcare company at nearly an 8 times gross investment return on that particular company. And then subsequent to Q3, distributions have continued, and we have made a 3 million distribution back to the plan in December, and another 3 million distribution back in February. Again, both of those from Series 1. Moving to returns as of Q3, relatively steady in Q3, and broadly, I would characterize as broadly in line with overall market conditions across private equity. The net TVPI of Series 1 increased from a 1.91x to a 1.94x during Q3, and net IRR is now at 16.6%. Whereas for Series 2, net TVPI increased from 1.18x to 1.19x, and the net IRR now at 21.6%. And as I mentioned, we're still committing new capital out of the Series 2 program, and so each dollar goes in at cost, so that in the near term dampens, kind of pulls the net TVPI back toward 1. With those introductory comments, I'll turn to page 12, which goes into the performance metrics on each program in a little more detail. And so page 12 shows Series 1. Starting at the top of the page, we lay out performance by investment type, so primaries, secondaries, and co-investments. Starting with the co-investments, those represent approximately 27% of this portfolio, and they can continue to generate strong performance with greater than a 2x gross TVPI and that 21.6% gross IRR. Secondaries continue to be a strong contributor, not only in terms of returns, but also that what we call gross DPI, which means that those investments have returned 92% of the capital invested in them to date. That's more than 0.92x DPI. And then primaries still developing and investing, and so we expect continued value creation from the current mark as of Q3. And then if you look at the bottom of the page with the benchmarking analysis, this program is considered a 2017 vintage fund. So compared to the benchmarks for 2017 vintage fund, it compares favorably. It's second quartile, really toward the top of the second quartile on both a net IRR and net TVPI basis. And then finally, turning to page 13, looking at Series 2, kind of the similar layout here as we had on the prior page. This, as I noted in the introductory remarks, this program continues to invest and deploy capital, so very early in particular for the primary and to a lesser degree the co-investment returns, but both are still in a good place given the age of the portfolio, while secondaries are off to a very strong early start. And then finally, looking at the bottom of the page for the benchmarking, similar to Series 1, second quartile on both a net IRR and net TVPI basis, but also just very strong absolute returns. So I'll pause there. That concludes the introductory remarks. So like I said, I'll pause quickly.
I could ask a question. So I just want to get the Neuberger view on the private equity space. I think if you follow the financial markets, a lot of concern about the impact of AI on different sectors. And particularly in an area which has been very popular for private equity, SaaS, software as a service. So if you could maybe just touch on that, and, if you look at the stock price of a lot of these private equity firms, they're down a lot, which reflects market concerns, but I'm just curious to see what Neuberger thinks about, kind of these issues.
Sure. Yeah, very, very top of mind, and a question we've spent a lot of time thinking about, both internally as well as getting views from all of the managers that we interact with on a regular basis. So I'd say, like any topic that's as broad as this, the answer is nuanced, right? Like, certainly some companies will be impacted far differently than others. I think broadly across private equity, everyone is, very focused on this question, both in terms of their existing portfolios as well as new investments that they're making. I think, to make a very broad comment, the more kind of core system of record, or the more sort of truly proprietary data you have, and the more important you are to the end customer, that tends to be a stronger position than the alternative. I think, two, you end up focusing on, I guess from a broad perspective, some of the cost of coding potentially coming down quite meaningfully. So that is, if you want to think about it in terms of barriers to entry, that is perhaps coming down pretty substantially. But that's not the only barriers to entry that or the moats, or the only way they were adding value for their customers. And so I think, putting it all together, and apologies, happy to go further, it will be nuanced. I think every manager is highly focused on it. I think every company is using it. I think, broadly speaking, companies have had stronger success to date using it in terms of reducing costs and creating efficiencies, with potentially more to come, versus on the revenue side, in terms of generating incremental revenue, it's been a little more mixed and slower to have success there. But I think this will continue to evolve, and I think it's certainly an opportunity and a threat across the landscape. But really, to get a perspective on the likely impact, it really does vary company to company. And apologies, that was kind of a long, rambling answer, but happy to take any follow-ups there.
Okay, thank you.
Any other questions? I'm sorry, any other questions? No?
All right, thank you, Tyler. Thanks, Dinesh.
Perfect. Thank you.
Thank you.
And for the last time, let me call the brilliant Laura Wyrick.
Good morning, members of the board. Laura Wyrick from Akita Investment Group. I know that the comments before were for the board to thank Prabhu, but just wanted to say that I've gotten to work with many institutional investors and chief investment officers over my 18 years at Makita, and prior to that, several years at other firms. And it's been an honor to work with Prabhu. I think a lot of you mentioned the management of the team, and putting together a great team and empowering them. And being able to implement the board's governance decisions, which have been so impactful recently, has been such a amazing thing to witness, and I've been glad to be here for it. So thank you very much for that. Looking at our recent performance reporting, I don't have my colleagues here today to run the Zoom. So let me try to make sure I'm blank in here. We'll start with private markets. All right. So taking a look at the total private markets program, we can see the various entities, the legacy private equity, the Neuberger Berman Fund of One, And then the private debt, real estate, real assets, and venture capital programs. Venture capital being the most nascent, having started with a fund just in 2020, which is pretty recent for the venture capital space, as you all know. I'll point your attention to the internal rates of return, which are the second column from the right, relative to public market equivalent internal rates of return. You can see that each private markets program is outperforming what you would have received putting those same dollars and having those same dollars distributed from the relevant public markets index. And way at the back of our materials on page 56 is where you can find what exact index we're using. But for example, for private debt, that would be a below investment grade credit index. For private equity, that's an equity index. So it's been a strong program. And you'll see as I go through the slides that most of these programs are well developed and sort of either giving out more money than you put in recently or sort of self-funding over time. Private debt is the first program here. You can see it has an IRR of 7%. And if you take a look at the cash flows, the contributions relative to the distributions here, you can see that a lot more has been coming back to you in the form of distributions from this program than you have put in recently. No new investments took place during the quarter that we're looking at here, the third quarter of 2025. And you can see returns for each of the individual investments in the program dating back to 2010 on pages 5 and 6. You can see that in general, the investments made under your current investment staff the past several years have been performing quite well. We also take a look at diversification. As we would recommend in private debt, the majority of investments are in North America, and you can see that they are diversified by vintage year. The next program we look at in the report here, you can see the real assets funds right now stand at 3% of your overall plan relative to a 4% policy target and have an internal rate of return for the length of the program of almost 13%. This program had about equal distributions and contributions during this quarter and no new investments. On pages 11 and 12, you can see the individual investments in the portfolio. I'll get into recent movements in the overall market when we talk about the total pension fund, but this is the area of your portfolio that I would expect to benefit from higher energy prices that we're seeing right now. This program is a bit more global in nature, but still diversified well by vintage year. The next program here, you can see real estate. Right now it's at 4.5% of the overall retirement plan relative to a 4% target and has an internal rate of return of 9.2%. There was one new investment during the third quarter of 2025, Forbridge US Real Estate 5 with a $17 million commitment. And you can see here that you received $8.2 million in distributions relative to 12.6 in contributions during the third quarter. And the individual funds here dating back to the inception of the real estate program back in 2012 are shown on pages 17 and 18. This program is largely devoted to North America and also diversified by vintage year. Last but not least, the venture capital program is the newest, dating back to 2020 when the first investment was made. It has an IRR of 8.9%. Currently, it's underweight its policy target as the investment team continues to evaluate and commit to new opportunities. That the allocation is 2.5% relative to a 4.5% policy target. And as you would expect with a newer program on 21, you can see that there have been many contributions into the program, but no meaningful distributions as of yet. And then individual funds, despite being a small program, it is a very diversified program in terms of a lot of individual commitments at relatively small commitment levels. And we are working towards that vintage year diversification coming along quite well so far. And you can see that 83% of this program is invested in North America. We have a lot of other slides. About half of this book is on market environment. I know that Nikita, our administrative team, is working hard to make all of our reporting ADA compliant, as we've been directed to do with reports after April 1st. And it takes them a very long time to map out exactly what's on these 25 slides about market environment. So if it's okay with the board, we may going forward provide the market information to you in some other format and have the publicly posted materials just be the performance for your fund. Any questions I can take on the overall private markets program?
Just got a quick question, and this is, from the previous conversation with Newburgh Berman. There's been a lockup on distributions, the private side for a while. How's it shaping up this year, calendar year, fiscal year? Seeing more flow?
I think every year we've had managers coming into the year saying, this is gonna be the year, things are finally gonna pick up again, so. I wouldn't say that that's necessarily the case, you do see a lot of sales to secondary funds. There is some movement. I read a piece by a private markets manager that said they thought it was going to be a mid-year, as the teenagers would say, in terms of, not a great year for distributions, not one that anybody would hope for, of exits and sales, but sort of muddling along.
Thank you.
Okay. Shall I move to the total fund? I'll start off a little bit on market environment here for the total fund. We have the market update in here, as we normally do, that goes through recent index performance and different metrics like inflation and growth and whatnot. This obviously is a bit outdated at this point, going through the end of December, when we've clearly had a lot of activity very recently in markets. But just to set the stage for the performance that we're looking at here on page 5, you can see that commodities were the top performing asset class for the fourth quarter of 2025. But you do continue to see in 2025, really for the year as a whole, incredibly strong returns. There's only, one little bar on this chart that is to the left of the center line. Only real estate investment trusts had a weak fourth quarter, that every asset class was positive in 2025, which I think going into the year was not what we necessarily would have expected, given volatility, given tariffs, Liberation Day, everything else going on, geopolitical tensions, obviously, which have escalated. Emerging markets were the top performer for 2025, up 33.6%, followed by the MSCI EAFE, which is developed non-US stocks, up 31.2%. Currency movements and weakening US dollar did drive some of these returns outside the United States. But you do see even investment grade bonds, the Bloomberg aggregate, up over 7%, which is a higher return than we'd expect long term. Talking a bit more about recent returns here through yesterday, the commodity index was the standout performer for the quarter to date period of 22.8%, given the events, the war in Iran and oil shortages. American consumers, I think, are obviously feeling pain at the gas pump. However, the United States is a net energy exporter, so there's been more of a negative impact on our allies in Europe. If we take a look at the ACWI index, the All Country World Global Equity Index is actually positive for the year still through yesterday, just barely, up about 10 basis points. We see the US through yesterday down 1.6%, emerging markets actually up 6.7%. So, while this seems to be a theme over the last year or so, that there's a lot of volatility in the world, there are a lot of negative things going on. However, investment markets have proven to be pretty resilient, more so than I think they would have expected. Since February 28th, the start of the war, the MSCI World Index has fallen about 3%, but we did have some positive returns before that in 2026 year to date in January and February. I know we had a recent investment committee meeting. We talked quite a bit in detail about the risk environment, but in the interest of time, I will move ahead. As you know, we have the watch list in every quarterly report. According to your investment policy statement, any manager that has a return below its benchmark for 3 or 5 years, which of course can be many in different market environments, even if they are outperforming peers or outperforming since you hired them, goes on this watch list. We also have the slide where we look at recent changes on investment teams and things like that, and what Makita's recommendation is on page 27, as well as some commentary on those notes. Taking a look at the overall portfolio on page 34, you can see that it hovered just below 6 billion as of the end of December at 5.9. You can see that the current allocations, especially with the overlay, were quite close to your policy targets. And then taking a look at returns, your 1-year return was 13.6%. So much above what we would expect for a long-term return. If you recall, when we do asset allocation studies and analysis, our 10 to 20-year expectations for return for the plan are closer to about 8% per year. So a 13.6% year is quite high. You can see that it was above median as well for the peer group. And if we look at the 3-year period, you've had an average annual portfolio return of 11.2% per year over the last 3 years. And that 10-year return now at 7.9 sort of hovers right around what we'd expect for a very long-term portfolio return. And I think, you all recall that this fund is less volatile than the peer group and the benchmarks, and so has protected quite a bit in down markets. We recently, of course, have seen a huge upmarket for a lot of areas, and the fund has kept up, I think, quite well in that upmarket environment as well. You can see the returns were driven in large part by really strong non-US equity returns. As I mentioned, those indexes were quite strong and your managers kept up largely with those. You can see that international equity for the trailing year was up 29.9%. And that was above the peer group median. Emerging markets, as you know, are more volatile, and your portfolio has a tilt towards India, which has been a very good thing over the long term. Recently, China has roared back a bit, and so we've seen a little bit of lagging performance. It's very funny though to talk about lagging performance when emerging markets equity was up 22.5% in a single year. So we do understand where those tilts are coming from and continue to work with the investment team on monitoring them. You can see private markets here as well. Private markets has had a 5-year return for your plan of 11.9% per year on average, almost 10% for the 10-year period. So it continues to be a ballast to the portfolio. In particular, the low beta continues to be a sort of steady eddy in the portfolio, outperformed with a 6.8% 1-year return, in large part due to 1-year hedge fund holdings in D.E. Shaw. But that portfolio continues to, I think, do what it's designed to do in your portfolio. If we take a look, skip to risk information, starting on page 61, we have a slide here for the 1-year, 3-year, 5-year, and 10-year. And I think, what I continue to point out as I have in prior meetings is just the risk-adjusted returns. When we take a look at the returns on the far left, the standard deviation or volatility in the second chart here, and then risk-adjusted returns on the right, you can see that over the 1 year, you see top quartile risk-adjusted return relative to the peer group. Same story for 3 years, 5 years, and right around top quartile now for 10 years as well for risk-adjusted returns within the peer group. That sums up my prepared comments on the pension fund, but I'm happy to take any questions.
Any questions on this? All right, go ahead and move on to healthcare.
Right. We have the same information on the market environment here, just in case someone were to just pull up this report. But getting into the particular healthcare trust, we can see that the market value on page 30 as of the end of December was 445.7 million, and current allocations were also close to policy. This fund had a really standout year. Its exposures are all through the public markets, as you know, which have been very strong recently. It has a higher risk profile and therefore also a higher return profile than the other funds in its peer group. So you can see that it is ranked first and second in the peer group in terms of percentile recently, and the 1-year return was 16.9%. That added about $12 million for the quarter. That's that return. This fund does have direct commodities exposure because it cannot do the same private markets investments given its size. that you do in the pension trust, and that's been a real positive recently, and we would expect that it has been in 2026 so far as well. You can see that the 1-year return for the Bloomberg Commodities Index here, you received a 16% return over the 1-year period. The risk in this document, the slides are on pages 40 through 42. And again, you can see here, even though this fund has much higher risk than many in its peer group, it's also matched that with even higher return. You can see that risk was in the bottom quartile or highest risk quartile. But return was not even on the quartile chart. It was so strong relative to peers. And so the Sharpe ratio is quite strong, trailing as well. We have updated Makita Investment Group's capital market expectations for the 2026 annual asset study. We'll bring that to an investment committee meeting soon. Given that we do have much higher valuations in equity markets, lower interest rates, we expected most of our clients' return expectations going forward to fall a bit. Of course, they are very long-term, it's 10 and 20 years. And so we did see them fall to 8% from 8.6% last year. Of course, that's we know that that number is not going to be exactly right, given that we don't have a crystal ball, and it does remain, well in excess of your actuarial assumed rate of return. So we wouldn't recommend any changes based on those updated capital market expectations.
Thank you. Is there any questions?
Just a quick question. Looking at the returns, 1-year return. Looking at the difference between the healthcare trust program and the police and fire, it looks like the underperformance mostly came from public equities, that category. On healthcare trust, public equity was pretty much. Can you?
Oh, sorry. Yes, yeah, thank you.
Yeah, I'm just looking at the 1-year return chart or table here. And looking at the difference between the healthcare trust plan and the police and fire plan. On the healthcare trust side, it looks like, public equity component did pretty much a little bit better than the benchmark, whereas the, police and fire side did worse.
Yeah.
So I was trying to understand a little bit better as to why, try to attack that return attribution tables that you have. And maybe I just let you just explain to me what's going on there.
Sure. In this particular market environment, it was very difficult for active managers to keep up with indexes. The indexes are highly concentrated both in the United States and outside. And so the healthcare trust only has index exposure. It has the Northern Trust MSCI EFA index, which was up 31.2% for the year, and the Northern Trust MSCI Emerging Markets Index, which was up 33.3%. And this isn't a phenomenon unique to San Jose. We've seen really institutional investments across the board. It's been very difficult for active managers to keep up. However, over the long term, active managers and the tilts that you have in your portfolio, we think makes sense. So having the India exposure, having more emerging markets than peers, having that tilted towards India, and where managers can add value, we believe makes sense. So it's something we continue to underwrite. But we've seen that as well on the US side across our clients. It's been very difficult. Usually active managers, the reason that we pay them fee higher than an index is to look different from the index, and hopefully control risk on the downside, which they have done generally in your portfolio. But it has been a very small number of names that have been up, and active managers have tended to be positioned differently than the indexes.
Okay, so on the performance attribution chart here, page 59, the selection effect is essentially manager selection effect. And that's why it's negative for 1 year. And actually, it's all the same thing for 3 years.
So the selection effect is made up both of the managers that we choose, but also the positioning that we choose as well. Is there more growth than value? Is there more of a specific country? And that wasn't rewarded as much as the indexes had during the last year.
I was just trying to understand why the consistency 3-year negative contribution from selection effect
Yeah, there's some capitalization weights as well, you know, large cap, did much better. We've already seen some reversal in 2026 of some of those themes, but, having just index exposure last year would have been a positive.
Okay. And I don't know if this is right, on the 3-year attribution table, emerging market debt, excess return is negative 4.5. I mean, it doesn't seem like a big number, but that's the biggest of all the different components there. Is that
So the manager in emerging markets debt is a long short manager, the Wellington Wazoo portfolio, one of your managers, that's on page 48. And so that is not sort of beta exposure that you'd expect.
got it?
If you take a look at the,
I understand that.
okay, yeah, no, I think for everyone else, though.
Yeah,
you know, looking at this-
it's kind of like not in the right bucket. In some
Well, there
sense.
isn't really a right bucket for it.
Yeah. Yeah.
But yeah, having exposure to the long short strategy is, I think, a bit unique among
Yeah.
peers. This is a closed strategy that nobody else can get into right now, because if you look at the right side here, you know, it's top decile for the very long term.
Oh,
And
okay, why isn't it in the like long, short, low beta bucket? Because if it's long, short, it's gotta be low beta.
There's a lot of strategies that it's difficult to classify.
Yeah.
We think that while it is low beta, the return of the strategy is more similar to emerging markets debt than sort of just a diversifier.
Yeah, and just the volatility characteristics of that fund is not what low beta is meant to be as a bucket. And it's a unique, Iguazu is a unique manager. It's hard to bucket Iguazu in any one asset class.
Right.
I would say overall, I lead our endowment foundation practice at Makita. Your portfolio looks less like a public fund and more maybe like an endowment and foundation, which I see as a positive thing. The way that your governance works has allowed, you know, some individual manager exposures to be very long-term in nature. And focus maybe a little bit on risk control and not just getting the exact beta of the index. And I think over the long term, you do see that that's been rewarded.
Just a follow on. I was always thinking that was not secure selection, but manager selection that's causing the negative contribution to return here. But then you said that it's not just manager selection, but also security selection. What overweight or underweight do we have in the overall portfolio relative to the benchmark that's causing this consistent, like when I say consistent, it's 3-year attributions negative from security, from selection. What's causing that?
But before you explain that, Laura, I mean, so Dave, you know this, when you look at 1 year and 3 year and you said consistent.
Yeah.
1 quarter or 1/2 year can change not just the 1 year, but
Right,
also the
right.
3 year.
Right.
So if you look at the reports last year, you'd have seen the 3 year number was actually positive, right?
Oh, I see.
So some of it is just time.
Got it.
Yeah.
Yeah, I can address some of your questions. So, last year, if you just, because we have 3 buckets, right? We have global active managers, international and emerging markets. Majority of the underperformance come from international as well as emerging markets, especially emerging markets. The tilts that we had, Laura mentioned, India is one of the area. India experienced one of the worst years in like decades. They returned negative 24% or so compared to the index. So it was a very bad year for our tilt, as well as some active managers being very different from the benchmark. One example is GQG, not necessarily their style, but they are stock picker. And in a very concentrated market like emerging markets in 2025, if we look at the holdings of emerging markets, Taiwan semiconductor is about 14% of the entire index. So in this concentrated market, it's very difficult. And for international, we do have a tilt to growth, and growth and value dispersion was like the 23% for the year. So these are the negative headwinds we faced during the year.
And I think a good example of the different tilts, you know, on 41, if you take a look at Red Whale in particular, they had been having a very tough time over the 5-year period. You can see an 84th percentile peer rank, only a 1.4% return per year. They have more China exposure. If you look at the last year, though, they were at 41.2%. So we do see a lot of volatility in emerging markets, and we want these underlying assets to zig and zag in different ways and be focused on what we think will make sense for the long term.
Okay, thank you.
Any other questions for Nikita?
All right, thank you,
you.
Laura.
Thank you, Laura.
Thanks for the discussion. Excellent questions, trustee Kwok. And moving on to F. I would like to call the finest senior IO in the state of California.
Good morning. Looking forward to my last presentation from this table. That's what I've noticed. So it's the time of year where we're going to discuss pre-funding and the pre-funding of the process by which the sponsor, the city, determines the frequency of their sponsor contribution. We covered this at the IC, so if any of you all on the IC want to give the presentation instead, that's fine. I'm going to spoil the ending. As far as we know, the city has chosen not to pre-fund. They won't pre-fund either PNF or Fed. So we're just going through the process here for the sake of consistency and transparency. And that's important because the city makes those financing decisions way ahead of time. And so if they know that we have a consistent process for determining the discount that we offer them, then they can make those financial planning decisions appropriately as scheduled. So just for broad strokes, the city will be contributing about $228 million for tiers 1 and 2 and for the pension, and $34.2 million for the OPEB. These are numbers that are available in Chiron's 5-year projection letter. That was a couple of meetings ago. So the Chiron's letter also notes that if the city received the full discount for their past practice of refunding tier 1 on the pension, they would have saved about $6 million in change fiscally for the pension, and then maybe another $1 million for pre-funding the OPEB. So as a reminder, the sponsor has the option to determine the frequency of their payments, but you all as a board have the right to determine the discount that you offer them for pre-funding. And so to structure that process, we introduced a methodology back in 2014 that set a few triggers in place for reducing discount offered to the city. Remember, a smaller discount means the city saves less money. So we updated that methodology in 2022, added a trigger. Those triggers are, they're now economic conditions, stock market returns, and stock market valuations. So last year, one of those triggers were hit. So we reduced the discount offered to the city by 15%, and that's in accordance with that methodology. This year, 3 of those triggers were hit, all 3. And so this is the second consecutive year of hitting one of those pre-funding triggers. Methodology says we reduced it now by a total of 30%. So instead of offering the city the full discount of 6 5/8, the discount rate of the plan, we would reduce that by 30% and offer them a discount of 4.6375%. So again, they've chosen not to pre-fund. Well, I don't think that we've received official word of that yet. I don't know what to call it, that a rumor. But it's still important to go through the process, and I'm asking that you approve the recommendation of following the methodology and offering the city a discount of 4.6375%.
So this was discussed at the IC level. The IC agreed to push this forward and agree with the recommendation.
Motion to approve. Second.
All right. But a motion by Sunita, a second by Gretchen. Any further discussion? All right, all in favor? Aye. Any opposed? All right. Thank you, Jay.
Thank you.
There is no old business, so we'll go to 4A, oral update by CEO John Funk.
Morning, trustees. Last night, I had the pleasure of attending the city council meeting that ran well past 8 o'clock. Councilmember Stacy and I had no rest for the weary. The mayor delivered his March budget message for fiscal year 27 with over 180 members of the public present to provide comment. That was before council deliberations began on the process. I think the highlights that I'll bring to the board here today is that the city's facing another general fund shortfall next year, next fiscal year, estimated at $56 million, with a projected $27 million shortfall in the following fiscal year, driven by stated that it was driven by slowing revenue growth across property tax, sales tax, commercial development. The budget message did acknowledge that the retirement plan's unfunded actuarial liability payments are among the non-discretionary costs, which is good, but of course that creates constraints on the city's flexibility. On our next agenda, I'll include a copy of the budget message. On a much more positive note, the recruitment for our vacant benefit analyst positions has concluded. And I'm excited to welcome 2 new analysts to our pension team, Ann Nguyen and Sylvia Mark, who joined us this past Monday. Ann holds a master's degree from Southeast Missouri State University, and most recently worked at Corinthian Wealth Management as a financial operations and administrative specialist, where she supported retirement account administration and client onboarding, account transfers, and operational reporting. Sylvia Mark holds a bachelor's degree from the University of California, Davis, and most recently worked at the Department of Healthcare Services as a lead recovery analyst, managing Medi-Cal lien cases and collaborating with attorneys, beneficiaries, insurers, and so forth. So we welcome them to our ORS family. But with this news, I'm happy to report that after 9 challenging months, ORS permanent positions are all filled and we are fully staffed yet again. This does not include our overstrength positions. Our benefits program manager recruiting activities have concluded as an overstrength position. We're working with the candidate, but the temporary nature of this overstrength position has been a challenge. We hope to have more information concerning the support of our budget request in the coming weeks on whether or not we can plan for this to be a permanent position. Our overstrength deputy chief investment officer position was put on hold while the board concluded its recruiting for its new CIO, which we hope will conclude at the end of today's meeting for police and fire. We're planning for a JPC meeting on April 1st to review the investment compensation study. And as we have Gallagher's final draft report and recommendations. Just a reminder, the next quarterly retirement planning workshop is scheduled for May 28th for police and fire at 8:30 a.m. We're working through our procurement contracts that the board approved for our communication consultants and working as new contracts come up. We're also working with OER through this new process that requires or may require us to participate in a waiting period and notification through OER to our city unions. We've got a big strategic planning agenda item today. I think it's only maybe 12 words, but it probably will take up most of the meeting. We also have a governance committee meeting after the police and fire meeting today, and we have a pretty heavy agenda for there too. From an internal audit perspective, Baker Tilly put together an audit plan validation worksheet and has been gathering inputs from ORS staff concerning previous audits that have been completed that were ongoing or never started. This will be an input into the risk assessment process and help determine the audit universe going forward. We have a handful of internal audit items that are ready to be updated to complete, also on the agenda later today. Going forward, Baker Tilly will validate all items proposed by staff for closure to ensure they are appropriate to close. Baker Tilly will take over the presentation of the internal audit status report going forward. Member statements were distributed to members in February. The guaranteed purchasing power for 2026 was paid to those who qualified also in February. Police and fire retirees impacted by 415 limits for the limit for 2026 was increased to $290,000. They will see their 2026 adjustments in March payments. COLA was applied in the February month for our retirees. Eligible police and fire retirees received their annual Medicare Part B reimbursement letters in February. This information is due to ORS by April 1st. I've mentioned a few times about our ADA WCAG 2.1 compliance requirements that go into effect April 24th. I've been understating the amount of work that has gone in for the organization to be ready for this requirement. Just to give you an idea, we have over 100 documents that we're working on internally, as well as we have outsourced about 100 documents to remediation specialists. Mostly our more complicated documents, if you think about our ACFR document as an example, it's over 100 pages. It's very complex with graphs and charts and tables, all of which are very complicated to make ADA compliant. And so the city had contracted with an outside vendor to help support, because this is not just an ORS requirement, it's not just a pension requirement, it's a governmental requirement for all governmental agencies, and different timelines based on the size of the constituents. So, but our timeline is April 24th of this year. So I just want to point out that staff is working really hard behind the scenes. We're also working with our consultants. We've started to put, even though the deadline isn't until April, we're trying to increase our expertise before that deadline, so that, and communicating with our consultants around where their submitted content has not met the standard, so that they can also prepare, so that when they start to create content after the April 24th deadline, that it'll lessen the back and forth and the burden between both of our groups. So just a quick thank you for staff and just for an awareness for the trustees. I attended CalPERS General Assembly last week, and while there was a lot of great content, the only thing I really want to point out is that they're bringing back the principles of pension governance for trustees. They have a save the date for August 24th to the 27th. Really targeting for newer trustees or trustees that want to get a reset on their governance hats. I don't have a location yet. I have reached out to their administration to see if they could give us any indication of where they're targeting to have this, but the save the date is April 24th, 27th. And then also NC PERS runs a public safety conference, and they run this every 2 years. It's the only national event that's dedicated to public safety pension systems. And I know we've had a few trustees that have attended this in the past, but that is October 25th through the 28th. And that's going to be in Nashville, Tennessee. They don't have any registration or hotel information yet, but they have told us those are the dates and locations. So just to save the dates for you, I think, the first one is important for any trustee. The second one is really important for police and fire trustees. And then lastly, the office is scheduled to be closed on March 31st for Cesar Chavez Day. I know that was a lot, but I'll take any questions.
All right, thank you very much. We'll go ahead and go to 4B oral update by Councilmember Casey.
Well, John stole most of my thunder
Problem.
there, so I'll be brief. One item of note, we had at a council meeting a program where we're gonna invest in workforce housing. I attempted to set aside 50 units for police officers. It was shot down for legal concerns. We had a legal memo from our city attorney confirmed that it isn't a problem. We'll be reintroducing that, and I think it's a great opportunity in terms of recruitment, retention, particularly for cadets and folks that look at San Jose and see the nice salary, but then recognize the housing costs are gonna be a challenge. So, we're looking to get those 50 units and moving forward another 50 to 100 more, down the line. So it's my only update.
And just for clarification, you said it was originally shot down, but you were able to work with the city?
Yeah, there were some concerns about the legalities of set asides or preferences specifically for police officers, which the concerns were unfounded. So we had a legal memo come through the pike subsequently that confirmed that we can do it. There shouldn't be any issue. So I'll be reintroducing it through rules back to the city council for us to vote on that. I don't anticipate there being any opposition at the next go around.
Thank you very much for the update.
That's great. Thank you.
All right, 4C, discussion action to approve for the sheriff to execute agreement contract negotiated via labor negotiations for the new CIO. So most of you guys are well aware that we, for the last 3 to 4 months, we've been through a high level CIO executive search. It was extremely competitive, a lot of candidates that came forward. That was a very strong pool. Because of the strong applicants that we had, we did 3 rounds of interviews, and we would like to formally announce that we have come to an agreement with Jay Kwan as the next CIO of Retirement Services Pension Plan for both Police and Fire and Federated. This is something that we do need to vote on to make it official with the start date of April 13th, I believe, April 13th.
Motion to approve.
We got a motion by Santos,
Second.
second by Eshwar. Any comments? All in favor?
Aye.
Any opposed? Okay, congratulations, Jay. You have any comments you want to share?
Yeah, I can't believe y'all put me through 3 rounds. A lot of work to get through, but I really appreciate your trust, and I will toil unceasingly for the benefit of the plan. I wanted to take the opportunity to thank you all. I also wanted to thank Prabhu, certainly, for not just help through the process, but the past 8 years. It's been so much work. It's a lot of work, and in hearing all of the litany of accomplishments, I know we can only I can only hope to come close there in matching that term. So I wanted to say thank you, and one last note, and this is for the staff. I'm gonna speak into the mic so it's on the record, but this is for y'all. In the interview process, the trustees asked me about my leadership style, and I gave a really mealy mouth kind of half answer, and said I wanted to be a servant leader, and I've been angry at myself ever since about the way I responded there, because I should have been much more forceful. And so for staff, I promise that I will try to put you in the best position I can for your success. I will fight for all of the resources that you need to do your job. I'll strive to keep your independence here so you can do your job unfettered. And all because I know that you all want to do a good job as you can, and you care about the plan just as much as anyone else in the room. So I know for the success of the plan, it's going to take a partnership between everybody here, staff, board, consultants as well. And I look forward to a long and successful term. I think I promised you 15 years, so we'll see.
Well, congratulations and thank you, Jay. All right, that brings us to 4D, discussion and action approval of the strategic plan. We have Aeon joining us.
Julie, are you with us?
Yes, can you hear me?
Yes, we can. Can you hear us okay?
Yes, thank you. So if we could go to slide 3. So you've seen this slide before. It's our overall strategic planning principles. Our aim today is to confirm direction on the core components of the strategic plan so that staff and Aon can translate that direction into an actionable plan with clear measures and accountability. And importantly, the plans intend to be rolling. So you will be receiving periodic reporting from John so that progress is visible and kept current as conditions change. So if we go over to slide 5, the roadmap we have laid out here, it's sequenced to move from board approval of direction to staff to execute with accountability. And today we're going to seek your approval on mission, vision, core values, key themes, goals, and objectives. And those goals and objectives will then be translated into action plans with measurable initiatives, milestones, assigned accountability, while aligning resources, capacity, and budget. So we go to slide 6. This is just a continuation of that roadmap. So after approval, John will communicate the priorities organization-wide, and the strategic plan becomes the decision-making framework. Implementation will begin as soon as possible, with progress tracked using appropriate metrics and regular reporting to the board. And this model also anticipates a refresh. So the board can refine priorities and refresh goals as internal or external conditions change, keeping a rolling planning model going. So on slide 7, thank you. So as I mentioned, today, all these materials reflect the board and ORS specific input gathered over several months of interviews, survey feedback, and discussions. So we are going to submit for your consideration, approval, direction, a suggested consolidated mission statement, a new organizational vision statement, proposed core values, and the key strategic themes with related objectives. If there are language differences between this board and the Fed board, or any other outstanding items from these meetings today and tomorrow, we recommend that you either authorize the governance committees of the boards to resolve those differences, or you can have a special joint board meeting. So it's whatever the board is comfortable with. So if we go over to slide 8, I like this quick snapshot cheat sheet to show the different terms used in strategic planning. So your mission states why you exist, and your vision is what future you're trying to achieve. The core values describe how you behave while getting there, and the strategic themes are what we will focus on. And then that implementation, the action plans, metrics, timelines, assignments is how you will execute and measure. So if we go over to slide 10, we listed the current mission statements, and you'll see there's a lot of similarities between the two boards. And, as I said, the mission statement provides the purpose and objectives in the present. It describes what you do, who you do it for, the benefit you provide. It basically explains why you exist. So on slide 11, worked closely with staff to come up with a suggested consolidated mission statement for your consideration. So the new mission statement could state, as listed here, our mission is to deliver accurate and timely retirement benefits and services while prudently managing the assets entrusted to you with integrity, accountability, and a long-term vision. So I'll pause there to see if there's any reaction to the suggested mission statement. Okay. And feel free to interrupt me at any time with any questions or comments. So if we go over to slide 12, These are our vision statements, and vision statements talk about future direction. It's aspirational and inspirational. It describes what future the boards are trying to create. And examples from peer public pension systems highlight being a model for excellence, a trusted partner, and a leader in public pension fund management. So on slide 13, we have a proposed organizational vision statement for your consideration to be a leading public retirement system recognized for fiduciary excellence, innovation, and trusted member service. Again, any initial reactions? Okay, we'll continue on to slide 14. These are your core values, describing fundamental beliefs and guiding principles. So you don't have to adopt all of the listed core values. We do recommend if you are going to adopt core values, you pick, perhaps the top 3. So 3 to 5 is usually what we see as part of strategic plans. So if we go over to slide 16, this is a snapshot of the full set of our recommended themes. And I'm sure none of these are going to be surprising to you. A lot of these are already taking place, but the strategic plan helps to organize them in a thoughtful, planned manner to be executed upon. So we're looking at financial stability, member-centered service, transparent, proactive communication, engagement, technology, cybersecurity, looking at ORS internally, the organizational capacity, talent, and succession, and then overall strong governance and effective board dynamics. So slide 17 goes into the goal with the related objectives. I won't read the whole slide to you, but the goal is to ensure long-term financial health through disciplined funding, prudent investment oversight, and risk management. And then you could see the objectives listed below. We go to slide 18. This theme focuses on delivering a consistently high standard of service across all member interactions. And you could see the objectives there to ensure that you are meeting that goal.
Julie, this is John. Can we pause here for just a moment on this slide? I just want to give some context for the board. So the idea is that we have a goal statement, and underneath each goal statement, we have a list of objectives. Once you approve the goal and objective, staff will go away to develop an action plan, some metrics by which we will be measured, judged, however you want to say it, for each objective against the action plan that we put together, so that we can present that to you at a future board meeting and come to consensus around what we want to achieve and how we're going to measure whether or not we achieved it. So because these statements here are still more generic, and but the action plan is where the rubber will meet the road for ORS, for police and fire specific, maybe for federated specific, or both police, fire, and federated. So I just want to put this in context. You're going to approve these goals and objectives, and then myself and the staff are going to go away and produce some more detailed. Here's where we think we can get. Some of these may be we can accomplish this in 6 months. Some of these may be here's where we can accomplish in the next 6 years, right? Because we have limited resources, limited staff, and maybe to accomplish some of these goals and objectives, we will need additional resources and additional staff. And put that in the context of the budgetary environment we just described. We will likely not be able to achieve everything in year 1, maybe not even in year 3 or year 5. So just kind of want to lay that out for you, so that you see where your approval of these will end up taking us. Sorry, Julie, I didn't mean to.
No, that was very good. Feel free to jump in at any point with any comments. So if we go over to the next slide, you can see the goal dealing with transparent, proactive communication and engagement. And, the goal here is to sustain trust through transparent, proactive communication and meaningful stakeholder engagement. And you can see the objectives there, which includes transparency, clear, timely information to all your stakeholders, and maintaining productive collaborative relationships with city leadership. So if we go to the next slide, this one focuses on technology enablement, can't talk today, innovation and cybersecurity. So leveraging technology to continue to enhance your service delivery, operational efficiency, and organizational resilience. And then you can see those objectives there. To go to the next slide. This focuses on the organization. So building and sustaining a high-performing organization through investment in people, leadership, continuity, and organizational capacity. And again, a lot of these things are already taking place, but this formalizes those objectives. And as John stated, will be translated into discrete action steps with timelines, assignments, and accountability, which will all come back through John's reporting. So the next theme on the next slide is your strong governance and effective board dynamics. You already have strong governance, but it's great to always continue to refine that and refresh it. And so this focuses on continuous education, ensuring that there's clear roles and responsibilities, effective practices, and proactive engagement. So the next, if we could skip over to slide 24. So,
Question?
yes.
Back on page 17, we have this goal of disciplined funding. And isn't sort of funding a little bit outside our control? It depends on how the city is doing, et cetera, and, the contracts. So I just wonder if it's something that's.
So, Bill's not on the line today, but you, along with the recommendation of the actuary, have a funding policy, right? So when we have a liability or an excess, the way those get incorporated into the valuation process, and then the way we amortize it over time, that is within your control. That then also goes to the funding requirements that we approve, and then the city has to pay. So you're not actually writing the check from the city, but the way those contributions get built are based on your approved policies around those components. So does that make sense? I view it as one of the major changes that this fund had, when you look at it over maybe 2 decades, that you went from a rolling amortization policy where every year you just refinanced all of your liabilities versus this, I just lost the term, but it's like a pancaked version of mortgages. So every year you create a new liability and a payment structure that gets you to repay that debt. And that's a fixed, each year becomes a fixed payment amount that gets layered amortization over time. And so that's completely your decision on how to do that. I mean, we rely heavily on our actuaries to tell us what current best practices and how that changes across the industry. But that is within your control.
Yeah, I mean, point taken. I think there's always been probably I've not educated myself enough on this, because I think Harvey and I used to always say, isn't it an output? But there are levers, I guess, to make it easier on the sponsor.
Right, and in these financially constrained times, the city may take an opportunity to come to the board and want to discuss what that funding policy looks like and your amortization policy, to understand if there are any levers that could provide relief in these budgetary times of release. But the unions may come to the table and say, well, we want to make sure that we're solidifying our future and we don't want to put anything at risk. And so trying to find that right balance is really how the board creates that policy.
I had one other question. Were you gonna say something? Which is, I forget where it was, but we talk about innovation or being innovative and the vision. This might be a little bit of more of a.
Yep.
Are we really on page 13? Are we really seeking to be innovative? And so what is the connotation of that?
Innovative relative to what NVIDIA is doing, or innovative relative to our pension peer groups, to other governmental organizations. When we talk about, I'm working on our budget presentation for next month, and I'm working on a slide in there about AI and how we're looking to incorporate that. I think if I gave that presentation at the NVIDIA conference this week, I would be laughed out of the room. But among my peer administrators at, say, CalPERS, it might be well received.
Makes sense.
And so I think it is all relative, but that is what we strive for. But we always have to do it in context of our environment.
Thank you, John.
Sure. I will add into that, at that CalFIRST conference, we were talking quite a bit about IA and how it could be used. We talked with the company that does the death checks and some other stuff, and some of the innovations are coming by using AI and how to make it more efficient in checking a lot of these things, double benefits, overpaying and FLSA. So it's really a big talk, and I think that's really what the innovative part's gonna be. For just double checking benefits, and then you get eyes on it and become more effective and efficient.
And I think when you say innovation, I go directly to technology, kind of just my background takes me there. But innovative is also governance structure, right? When you look at your delegation of authority to the investment team, I'm not sure when that delegation actually happened, but it was probably innovative at the time. I think more and more pension funds are coming along on that road now. But that's innovative, but in the sense of governance. We talked to CEM benchmarking at the conference, and I have worked with them in the past. So being innovative in how we benchmark ourselves to other pension funds. I mean, you could use the word in lots of different ways, but it's meant to be visionary, not constraining.
All right, thank you. You go ahead.
Julie, back to you.
Thank you. So I think before we talk about next steps, sorry to make you jump around in the PowerPoint. If we go back to slide 7. And, see if the board is comfortable with the mission statement, the vision statement, core values, all of them or some of them, and the presented key strategic themes.
Anybody have any feedback? You're all okay with what they see?
Yeah, I'm comfortable with it.
Cool. Julie, it looks like we're all okay. Everything on page 7, everything you presented so far.
Great. So what we'll do, we present to the Federated Board tomorrow. And, after that, as John mentioned, staff will start fleshing out those action plans with, the details of how staff is going to implement those goals and objectives and, make assignments, make timelines, milestones, how to measure success of the action plans. And, John and I talked about him having a separate strategic planning report that will come to the board on a regular basis. And then if changes need to be made, that will come back to the board to make those changes. It can happen on a rolling basis. Some boards decide, we're going to have the rolling plan, but we're going to do a full refresh in 3 years. You can do whatever is comfortable with you. I recommend seeing how this first year goes to get your comfort level with the pacing and the reporting and go from there. So John, I don't know if you wanted to add anything else. Those were my comments.
No, I think you hit it on the head. I mean, this is going to create a little bit more administrative work. I'd like to bring at a minimum quarterly written report to the board meetings. After a year of implementation, bring back something to the governance committee meeting to talk about, is this working, from a structural standpoint? Anything, being that it's our first strategic plan, is there anything that we'd want to change? Strategic is meant to be looking out 3 to 5+ years, but I really be hesitant to change the strategic plan every year, right? That's what the action plans are for. But the important part, I think, will be, at the governance committee meeting today, we're gonna have our first discussion on policy review, and we're reviewing the CEO and CIO performance evaluation policy. And, I'm hoping that we're gonna develop a strong connection between the strategic plan to the annual goals to bring that back into the performance so that we're kind of all rowing in the same direction. And then my goals, I then divvy out among the staff, and so we're kind of all building that foundation so that at the end of the year can have made meaningful, measured progress. And the only thing I'll add to the action plan that we need to put together is also we need to define the resources that we need to accomplish whatever it is that we put down. Some of it may not require any additional resources. Some of it may be significant, and we have to figure out how to apportion that out based on where we are in our environment.
Any further discussion, questions? If not, this is a document that we need to get approval for them to move forward and better ready to take a look. So motion by Santos,
Second.
second by Eshwar. Any further discussion? All in favor?
Aye.
Any opposed?
You guys doing the workshop maybe?
I don't know yet.
Thank you, Julie.
Thank you so
Julie.
much.
Thank you. A lot of work went into that presentation, both from trustees, from our city stakeholders, Aon staff. And so that was the easy part, just saying.
All right, so 4E through H is similar to last month. There's some updates to multiple policies. I'll hand it off to John to
Sure.
touch on those.
These all are minor updates, no concern from staff on any of these policies. Our current process requires that we bring these to the board for approval. We do have a discussion at the governance committee meeting about giving me authority to approve these policies and move them off the new business calendar onto the consent calendar, both for efficiency of business, but also to address a governance concern. And so we'll bring that back to the boards, hopefully in April. But for now, we're asking for and recommending the board's approval on all 4 of these policies.
We're gonna take these one at a time, so we'll do 4E, vehicle policy. I got a motion by Santos,
Second.
a second by Gretchen. Any discussion? All in favor?
Aye.
All right, 4F, military leave policy. Got a motion by Santos,
Second.
second by Flicker.
Just John, have you made a comparison? What is the change in this military policy?
Sure, let me, Barbara, do you have that at your fingertips? If not, I can bring it up.
I'm not. Oh, the revision made was to clarify if the travel days outside the 30-day paid military leave period are needed, employees are no longer required to use their own leave balance, but rather may choose to use their own leave balance, or their time will be coded as unpaid military leave.
Does that make sense?
So they've got a choice.
It makes sense, but why would they have to use their own time?
I don't think it was a have to. I think they're allowed to.
Oh, or they go unpaid. That's not a great choice, but that's the
That's the
policy.
policy of the city. questions, comments? All right, if not, we got it, Santos and Flicker, for motions, no further discussion, all in favor?
Aye.
Any opposed? All right, 4G, discussion action on food and beverage expenditures.
So moved.
Motion by Santos,
Second.
second by Flicker. Any discussion? All in favor?
Aye.
Any opposed? And 4H on procurement car policy. Motion by Santos,
Second.
second by Flicker. Any further discussion? All in favor?
Aye.
Any opposed?
Mr. Chair, I'm gonna go back to that military leave. That might be one of the legal issues that Maytag was talking about. That might have been kind of checking, make sure all the details were taken care of.
I actually I don't think it's related to that military issue. I think it's giving, the employee some more discretion on what time they can use if it goes longer than 30 days.
All right, so that takes us to 5-1 service retirement. We got Carl L. Purnell, police officer, police department, effective April 11, 2026, with 26.42 years of service. I have a motion. Motion by Santos,
Second.
second by Woosley. All in favor?
Aye.
Any opposed? Deferred vested, Alfredo M. Garducci, police sergeant, police department, effective March 22, 2026, is 24.11 years of service with reciprocity. Jeffrey B. Perez, fire engineer, fire department, effective March 21st, 2026, with 22.43 years of service. Motion by Santos,
Second.
second by Woosley. All in favor?
Aye.
Any opposed? All right, does anybody have any comments they want to share?
Yeah, I've worked with both Carl and Sergeant Carducci, great police officers, great leadership at Sergeant Carducci. And if you have a long and happy retirement, then that would be fantastic. Wish you the best.
And I'll say to Jeff Perez, yeah, worked with him, great gentleman, great firefighter. We were glad to have him on board and hope he enjoys his retirement. Thank you. No other comments. We'll go ahead and move to death and survivorship notifications. Notifications of the death of Emilio Gonzalez, firefighter, retired January 28, 2024, died June 7th, 2024. Survivorship benefits to Jackson Manzanini, child. Notification of the death of John Piper, arson investigator, retired April 4th, 1996, died January 29th, 2026. Survivorship benefits to Charlene Piper, spouse. Notification of the death of Joseph X. Sanchez, fire captain, retired April 1st, 1973, died January 18th, 2026. No survivorship benefits. Notification of death of Douglas Zemke, police sergeant, retired September 5th, 1996, died January 20th, 2026. Survivorship benefits to Sandra Zemke, spouse. At this moment, we'll take a moment of silence. Thank you. At this time, we'll take any comments.
It's always sad to hear this, of course, with the three firefighters I worked with, two of them are pretty close, and it was sad to hear they fortunately had long careers in retirement.
Thank you. Yeah, same for Zemke Police Sergeant. That's a good long time to be retired. Both him and his family enjoyed their time with him and that they work in the one sense.
Thank you. There's no other comments. We'll go ahead and go to committee. report out. Trustees, Lee's not here, so I'll just give a quick report out. There was just 3 items on our agenda this month. We went over FX transaction analysis. Barris did a presentation on, or an overview on, our risk of the portfolio. And then we also heard from Jay about the pre-funding, which we heard earlier today. That was what we covered in the IC meeting. We'll go ahead and receive and file the minutes for December 16th, 2025. Our next meeting is scheduled for April 28th, 2026. Audit risk, Woosley.
Yeah, so we met there in February 19th and met Baker Tilly, the new internal audit consultant. One of the items of note is that they have proposed a risk assessment timeline to have a risk rating analysis conducted perhaps by April, audit plan, and presenting results in May. John, anything else to add? If not, our next meeting is May 21st.
We'll go ahead and receive and file the minutes for October 30th, 2025, which takes us to discussion and action on the 7 internal audit recommendations.
So, if you'll allow me,
Yes, go ahead.
like we've done at the past few meetings with recommendations from the audit committee for the board to consider these 7 items complete. This is the type of activity that will now be transitioned to Baker Tilly. But these are the last, these items were already in progress and scheduled to be completed, presented at the audit committee meeting, as Trustee Woosley just mentioned. And so with your acceptance, we'll go ahead and mark these as complete.
Any questions, discussion? Now I'll take a motion. Motion by Santos, second by Woosley. No further discussion, all in favor?
Aye.
Any opposed? Thank you. Governance, Whitaker.
We haven't had a meeting since our last board meeting, and our next meeting is today, so more next month.
All right, thank you. Disability, Santos.
Yes, back to CEO Clem, we got Victor's information on the time. You're good. Anyway, this meeting is April 13th, and you have the minutes of disability committee there. And that's it. We'll be meeting again April 13th.
Thank you. So go ahead and receive and file the minutes for February 9th, 2026. JPC.
We finished the CIO recruitment and we're gonna take up compensation on April 1st.
All right, thank you. Proposed agenda items for next month? If not, this meeting is adjourned. Thank you, everybody.
Take your pictures now.
Yeah.